I'm reporting from Little China, as they sometimes call Vietnam. But the Vietnamese are very proud of saying that they are the only nation that ever kicked Chinese ass. That sounds pretty American, but that's the only population that had a nearly 1,000 years war and kept the Chinese conquerors at bay and kept them north of Hanoi. The other ones that they can say is they kicked the Americans out. And of course, before that, they kicked the French out. So they have a point somewhere. So my background here is that I'm fighting Chinese supplies and competition on a daily basis where I'm based. Because 70% of all the label stock, of all the release paper, of every kilo of silicone and adhesive is brought in from China. And if it's impossible, if it's too expensive, then some other Chinese supplier from a little bit lower in the supply chain will come in with the ready-to-use product, and then the customer basically is losing his business. It has been for the last 15 years an eye-opening experience how rogue that is. Something I was not used from the European arena, a little bit more from the American, but from the European arena, totally not. So that has played quite a pivotal role also how I'm running my business, what to buy in China and what not to buy in China for purely strategical reasons. Now, the few slides and the slide you see in front of you here on the screen is continuing a little bit on the presentation that I gave on the Global Release Liner Conference 2 months ago. And I've been compiling from the government data from the US, the government data from Mexico, and the data from the Canadian customs authorities from 2023, 24, and 25. So the numbers that you see are millions of dollars, and the little number above, as you can see, it's 482,921.90, and those are typical blank labels. Now, blank labels, I will later come back to standard pressure-sensitive laminate and release paper, but the labels is of particular interest because what we have seen end of the last quarter of 2025, that China peaked in an export of nearly $41 million of this particular HS code to Greater Europe. And Greater Europe are the 28 states in which they spiked for one reason or the other, and I don't have the data yet for the first quarter of this year, spiked in the purchase of ready-to-use labels. So there you see this trend that it's not just, as my previous speaker announced, standard label stock that comes in from China at very competitive prices, but it's more like the ready-to-use blank label, tag, these kind of products that are now being imported as well. When I spoke to some of the key accounts, they acknowledge it. They say, yes, there are some standard formats. We don't even bother to produce them anymore for all sorts of internal reasons. Or buy them direct. So there is, for instance, a company in China, it's called Soon2Max. It's in the Shenzhen area. They make thermal paper, they make laminates, and they also make labels. And as an association, they also make RFID. They do everything. It's a joint stock company. That means the government is involved for a few percent, which makes the whole licensing process and the right high-tech degree to make exports and imports easier, much easier for such companies to grow at a very rapid pace. But if we go back to this sheet that you see in front of you, you see the average growth over those 3 years of imported labels into the United States is roughly 14%. That has nothing to do with the, let's say, the incremental growth of the whole market in the US at all. That was something like 5-6%. So it's outpacing a little bit their own incremental growth. What is interesting and indirectly hidden in this chart is the amount of dollars of ready-to-use label that is channeled from Canada into the United States, but equally from Mexico into the United States. And you see those two countries, they have the largest portion of materials that originate in Canada and in Mexico and then end up in the US. But in reality, and that's why they are actually accelerating from 2023 to 2025, because these tariffs of the current administration, they have been in the making for quite some time. So, of course, the Chinese, being clever, thinking, well, we need to find ways to bypass these tariffs, because in China it's 37%. It's similar to Vietnam. We pay 37% if we export pressure sensitive to the United States, paid by the importer. If you send it first to Canada and then into the United States, we only pay, or the customer only pays 25%. Now, there is all sorts of stories that it's probably not constitutional and they're going to cancel it, etc., etc. But that is the current status in 2024, has been 2024, 2025. So if you look at the Canadian customs data and then you look at the certificate of origin, more than half of that $61 million from Mexico originates in China. And more than 3/4 of the Canadian import originates with a certificate of origin that originates in China. So that changes the picture actually completely, but I have not made the modification in this chart. This is how governments report their exports and imports from certain territories. Can you give me the next slide, please? So here, these are the key insights actually. So you can say, yes, it was a peak year, very strong, 32%, and minus 13% correction. Mexico is the largest. Canada showed a strong growth, but in reality, it's just a couple of agents. There's 5 of them that just buy Chinese, just push it forward. Some of them slit it, where they changed the certificate of origin. That's cost a little bit of money. That data you also can find on the government websites in Canada, how much of that material has been changed and is then put into the North American market. You don't see it that much in California. You see it mainly in the Midwest, and you see it in the Northeast. And the Northeastern Triangle, Boston, where you go to Kentucky and then you go down south to Philadelphia, that's actually the area, the hottest area for Canada to export to. And for Mexico, it's predominantly New Mexico, Arizona, and obviously California. A little bit to Texas, but that's also relatively small. You can even find it per state. So Vietnam is on this list as well, as you can see, but that is deceiving because Vietnam is not, and I'm not selling labels. But what you see here is the company trade, the import from Avery Dennison from Vietnam. And Avery is, of course, producing in Vietnam their own labels, not like in Europe where it's been separated, but Avery still produces their own labels for their own Avery brand, and they are being shipped from Vietnam into the United States. And actually, we're only at 4 kilometers away from Avery, so we are very well aware of it, and the data show it, which is an interesting detail. Now, the others, India, Germany, Poland, they have big jumps. I didn't show you the figures because otherwise it's too much numbers. But Poland into the US is nearly at 40 million on a yearly basis of exported blank labels. That comes likely, but I'm not 100% sure, comes from Germany, because Germany was traditionally the largest exporter of ready labels into the United States. But you see that that's shifting to the east. All right, that is as far as blank labels is concerned. Can I have the next sheet, please? So now we're going to look at pressure sensitive gummed paper, and that's of course a different HS code. Now bear in mind, the HS codes I can look at are only 6 digits, and the real HS codes, they have 8 or sometimes even 9 digits. So there is a variety between all these pressure sensitive laminates that I cannot see. They do not publish them, and if they publish them, they only publish them 2 or 3 years after the calendar years have finished. But this pretty much gives you a similar perspective. You see Canada, you see Germany that export quite a lot, although Germany is on the decline. Canada has increased a little bit. Now, this is typically, of course, tariff induced. And I can tell you a small anecdote. When we in Vietnam were approached by many of these Chinese laminators, asking to just use our company in order to sell into the United States. We had even Chinese companies based in Mexico that said, well, if you can do it from Vietnam, that's much better. Now, we couldn't do it because the cost differences between Vietnam and China are probably 35 to 40%. And then we talk raw material costs. There are a few interesting reasons for it, but they go a little bit outside of the scope of this virtual seminar. So I leave them for a bit later. But we got 2 or 3 weeks after these Chinese companies were approaching us, we got a letter from the local government warning us that if we were to import Chinese products and changing the certificate of origin and shipping it to North America, we would be fined and the company would be closed on government's behalf. So there has been going on a lot of bench fighting about what should be allowed and what should not be allowed. And of course, there's always countries that play these games. So Vietnam does not play it. They really play the game from the United States. So we got fair warnings from our governments here to do it. What is interesting also is you see the exports from South Korea into the North American market, or in this particular case, the US, $131 million in 2025. So they're clearly doing something well. It's growing strong. And the total growth, as you can see, is pretty much comparable to what AWA is reporting or has been reporting over those years. It's a healthy 5% over those 2 years, 2023 and 2025. Again, you have to bear in mind that Canada and Mexico, large parts of what you see here of pressure sensitive is of Chinese origin. So the total imports from China, I estimate roughly about 350 million to 400 million US dollars on a total, over the total. Can you give me the next sheet, please? There we will find the key insights of this sheet. There we are. So you see, size market remains quite substantial on imports, nearly $2.1 billion of pressure-sensitive laminate in 2025, despite all the tariffs that have been in place. And of course, China lost some, but internally on the China side, they have been compensating it with the BRIC states, the Bridge Road Initiative that they are building from China until Italy, giving them special and favorable tariffs for just buying those label stocks and ready-to-use labels for better prices. And that, of course, they have offset. They had a growth in 2025 of 18%. Where they had a negative growth in the US of 3 or 4%, but it perfectly cushioned off, which is a compensating factor on that particular HS code. Now, Mexico was, of course, strong and China peaked but dropped sharply. That is, of course, only if you would not consider the imports from Canada and Mexico. Germany, of course, remains strong because it's highly specialized what you do. And here again, you see Poland, Vietnam, and South Korea are very strong, growing exporters of label stock materials. A little bit of a open question for this virtual seminar about what is happening with the transport prices. And I'd like to bring you with me on this journey, what has happened over the past 12 months with the transport costs. And I'm focusing on the maritime transport costs, 20-foot containers, shipping from Ho Chi Minh City, it could also be Shanghai because the difference is negligible, to any European port. So can I have the next sheet? There we go. That's going to be very small. So, of course, these costs are always seasonal. And to explain a little bit how the seasonal fluctuations are for maritime transport, you have to just remember the largest migration of human beings on this planet takes place in January or February of each year, which is the Chinese New Year. And just before the Chinese New Year, maritime costs or transport costs for containers are skyrocketing. That's traditional because everybody wants to ship everything out before China closes for 2 or 3 weeks. So there we typically see a peak, and then you see a sharp drop after the Chinese New Year, very often going even as low as just half the price of a month before. Then slows down a little bit more because the Europeans go on holiday in July and August, picks it up again in September, slowly moving upwards. You see a peak at Christmas for the West, and then again a top at the Chinese New Year. Now, if you then go to mid-2025, so you see that it's elevated because we had Red Sea disruptions. I'm not sure if you all remember what that happened. That has nothing to do with this Iranian-US conflict, but this was just, there were too many ships, there were congestions in the Suez Canal and all these things that led to longer waiting times for a few weeks. So they had to reroute stuff to Cape de Good Hope, which of course increased the prices a little bit. As you can see, it was between 3,000 and 5,000. And then late 2025 to December 25, it was mixed. There was some softening because there was a little bit less demand. It was in October, November, but then it spiked towards the year end because you have pre-holiday season. So, but you then have short drops where you only go to 2,700 in December 2025, which is, for international standards, if I compare it for the last 10 years, relatively low. Then early this year, you see a softer post-peak. That means after the Chinese New Year, you see a softer landing, so they remain a little bit higher. I believe the lowest that we bought was something like $1,200, where in other years you normally see a drop down to $900 or $800 for a container from Vietnam to, let's say, Germany or the UK or to France. So that was a little bit softer basis, but still volatile. That means volatile, there were not enough containers. If you needed 20 foot or you needed 15 of them, you all of a sudden couldn't do it, or you needed 2 or 3 forwarders to get those containers, which is really like, okay, if the demand is too long or too upheld somewhere else, they don't have enough containers, which provokes another spike that has nothing to do with the seasonable peak. And then spring, let's say the last 2 months, it rebounded. Early peak season, that's what we call it. Shanghai, Rotterdam, you look at $2,800 per container. 2 days ago, it's comparable. It's 2007 to 2008, which is not much higher than it was a year ago. So the conclusion there is that the Iranian conflict, if we look as Asians for maritime transport, and we see the same to Canada and the US, there is not even $100 difference between the tariffs that we had 12 months ago or the tariffs that we have today. And that's, I think, an interesting observation. So I talk to a lot of Europeans and they have 20% increases. I also see the transport increases from Europe back to Asia. It's not only the transport that increases, it's also the lead times that very often double. So instead of 5 weeks, now I need to wait 10 weeks before my container arrives from Europe into Vietnam. Now, the last time we ever saw that was just post-COVID, where we reached container price levels of nearly $9,000 to $10,000 due to the disruptions in major ports. But there is no such thing for the moment. So we see an increase from Europe to Asia, but we predominantly see also much longer times. And that's not because of Cape de Good Hope. It's just because there is not enough containers. So there is more transshipping going on. So instead of these ships going non-stop, they now stop at 5 ports instead of 2. And that, of course, every port stop is 4 days. So that gives them, of course, extra time that they, of course, tell their customers, and otherwise they don't have a container. That's from the European perspective. So there's not much you can do there. But I had some customers that have been rerouting it instead of going over Asia, going straight away over the Panama Canal, and still be cheaper with their transport to Asia than doing it over Cape de Good Hope. But that's a 60-day voyage instead of 45 days. So there is always then a lead time that you have to calculate. So that is in a nutshell a little bit what I had to say about the United States imports for ready-to-use labels and label stock, how we see what maritime transport does. Our oil prices here in Vietnam, the petrol prices on retail have gone back to normal, to January levels. So we don't see any impact there. We know that in Europe it's a very different story for whatever reason that is. What else can we say is that the ready-to-use labels in Europe continue to increase. When I talk to the key 5 main converters of blank labels in Europe, they tell me they have no choice, no other choice than to buy from China. And one of the questions was indeed, well, how does the quality compare? The quality compares equally when you run small quantities, but the moment you run, let's say, 2 to 3 or 5 containers for one size, you will never be able to run them as economical as you would have been able to run that product from a European or a North American supplier. There is always something that is a little bit off, that requires you to buy new knives, that requires you to remoisture a little bit because the lay flat is a little bit off. There are differences between the products you buy in Europe and the products that you currently buy in China. And that, of course, we do not speak about regulations and all certifications that need to come out of China, because if you really want to be sure that you have the right certification, the only way to make sure is do an internal audit yourself. There is no other way that you can trust what you get in terms of certification. We see the same here in Little China. If we're not careful, an FSC agent would simply propose you, and that's an official appointed FSC agent, yeah, we can do the audit in 1 week if we pay a little bit more. And in China, it's exactly the same story. So if you're serious about your imports and you want to be compliant, do your own audits. And for now, I don't think many of those buyers in Europe are doing those audits. So that is more or less what I have to share with you about the current status. The next report that I will do will be ready to use label imports printed and unprinted from China into Europe. But I'm still waiting for some more data so we have a complete picture. So that will, in the next virtual event, I will have that.
Great.
Thank you.
Thank you, Wilco. As always, your insights and your hands-on knowledge of what's going on really on the ground is super beneficial and insightful. It's good to note that, you know, your perspective and what you provided is aligned with the AWA study on the imports. So that's always good to have that alignment, particularly with someone who knows so much about that subject, who's on the ground. It's also really interesting to note, you know, your comments about costs. We'll come back to the import subject, which was the main subject covered.
Yep.
Comments about costs, and that, you know, it's not, you can't generalize and say one size fits all. I was surprised to hear that, you know, petrol prices in Vietnam are back to January levels, and obviously in Europe, North America, that's not the case. So, you know, we can't make a generalization about costs because there's so many different components and aspects to it. Also, your insights about transportation and the lead times, I think, are not insignificant in terms of the impact, you know, on our industry, particularly as you go back in the value chain and, you know, some of the really supply side materials and components are traded globally, you know, on the chemical side and the silicone side, adhesive side, which has an impact, you know, as it cascades down the value chain to, you know, the converter level for labels and liner and, you know, pressure sensitive materials. Thanks again for your presentation. What I have some questions, but would like to just encourage anyone to ask some questions in the live discussion, and we can get to it. Interesting about the quality issue, because that came up in a question in the live discussion. Appreciate the participant who asked that question. And, you know, in paraphrasing your comment on it, that for small quantities, you know, the quality is, let's say, good, and maybe the key word is consistent, where, you know, you get into the large volumes where you have economies of scale, which I think is probably important, because you don't want to produce and import a pallet or, you know, a few pallets at a time. You want to produce, you know, with the economies of scale and volumes that you can fill containers and export. And what you're saying is that the consistency of that quality may be pretty questionable. Am I putting words in your mouth, or is that?
It's a bit too negative to say questionable, because a lot of people get away with it, but it goes a bit far. But if you look at how China has pushed these 450 companies, coating, laminating companies, because it's 450 of them that are competing with each other, and not all of them are exporting. These companies all use only two laminating coating machine manufacturers. And those machines all run the same speed, which is not the speed that the Europeans or the Americans run. And they also work with an alternative set of quality assurance and quality control references. So most of them don't even use FINAT. They have their own internal standard. And then there is someone sitting in an office that is converting all those standards into edible North American TLMI and FINAT standards. Now, I'm not talking about the big five in China that export laminates, but all of those others, they derive it. You have to compare it a little bit with when you go to China. You switch off Google, you switch off Maps, you switch off everything, and you switch to local things. Well, in pressure sensitive, it's exactly the same. You have to read with a different type of glasses on your face. And that gives you small differences. So if you have a large converter in the southern part of Europe that runs a 4x6 parcel label, and he's consuming 5-6 containers a month. Now that's typical of a Chinese customer. And there, after 100 to 200,000 running meters on those presses, the tooling, the knives are not holding up. Or after 185,000 running meters, the adhesive is not as oil-free as it looked. And there the problem starts, because there your efficiency goes through the bottom in an already very expensive production environment. And that's where the Europeans now slowly start to realize, well, hang on a minute, this is big volume, but I'm gaining on the buyer side, but I'm losing on the efficiency side. And that is what Catalina said. That's something that is being more and more reported. Okay. And as Vietnamese company with a European owner, we of course do the right thing. It's simple. There's no shortcuts that you can do, and machines, calibrations and stuff, it's all a little bit off. But they have come a long way, Corey, in making laminates. And if you just run a full container, you would have no problem in running it.
Okay. But from container to container, there could be, a mismatch.
Yeah. There's mismatches, and that is the most critical part for me as well. If I develop a product and I sell it in America, it's for 45 to 50 days on the sea. So I need to be able to age such a product and reassure that the product still works as well on the converting line in Canada and in the US as when it left Vietnam. And that's quite a challenge.
Yeah, and we're talking about consumables in a model where you want the same product container after container, month after month for the next 5 years, or
correct.
Until
that's right.
So that's interesting. I wonder, from your perspective, Wilco, given this, what is the real risk to European and US producers from Asia competitors? Given that,
I think the biggest risk is that your costs locally will further rise. And I think it was mentioned a little bit earlier before, it's taxes, it's compliance, it's additional regulation that with all the right intentions can also serve as a tariff to protect your products. But it will add costs to those owners of companies that convert products and that resell them again to the very large brand owners. So they are the ones that are getting squeezed. So the biggest threat, Corey, that I see is those costs further rising. I mean, you look at an environmental assessment package. If you want to start a label company tomorrow in the Netherlands, it takes 3 years before I have my assessment. And of course, I'm not even talking about the money. It's also the time you lose before you are, between brackets, allowed to operate your business. Now, these kind of additional costs to the total capital investment and the risk, of course, whether your business model runs or it doesn't run. So the risk and the problems that I see is cost related on the European and the American side.
Yeah. And I think, you know, it's always a challenge to compete on cost, and, you know, competing on service or, you know, technical value add is often a more sustainable way to compete today.
It is, and there's many opportunities for those who see them.
Yeah. So if you look at imports into North America, imports into Europe, how do you think of trade barriers? In the US, it's tariffs, you know, monetary tariffs. In Europe, it may be more non-tariff barriers, regulation. Will that be successful or have an impact in, let's say, minimizing the risk of, you know, low-cost Chinese imports?
It will not minimize the risk. I think it will be the same, and there's always Americans that would steer clear from any overseas import at all. What you see as a result of one of the positive results of the tariffs that were imposed in the US is that the US has maintained a very healthy and high average selling price for pressure sensitive laminate. Where in Europe, you have seen the opposite. You see, because of cheaper Chinese imports coming, that there has been a price erosion in the commodity segment. So that is two differences that I can see in those two areas. Yeah. Where then I prefer, if I sell to the US, I never have a price discussion. I don't. Where in Europe, it's always, can you be cheaper than China? Yeah, because you're close to China. It's, you know, we're not talking about the quality. No, it's just price, which is fine because it's commodities. But somewhere, you know, someone needs to give, and that is then in the ultimate quality. And the differences have become smaller, but they're still there.
Yeah, interesting. And I want to come back to the comment you made earlier about, let's say, the elephant in the room in North America being, you know, maybe a success in limiting imports from China going directly into the U.S., but the diversion of imports then coming through Canada and Mexico. Has authorities gotten wise to that, and is it being, you know, limited, or is it still kind of the loophole?
As the speaker said before, they know very well, and I mean our PSL HS code is no exception. So they need to do this for cars and for aluminium and for thermal papers and all these things. So that's why in July there will be this discussion between the three countries in order to get some sort of harmonized tariffs, where the US probably will tell, well, hang on a minute, what's in for us? We let you do the import and do it because it looks nice on your trade balance, but we want to have our 5 or 10% share. And I think that's going to happen in July.
Okay. And let's keep track on it. We'll continue tracking it.
We will.
AWA, maybe you planted a seat to have a follow-up virtual update on this subject, you know, further down the line, as more information is known and different aspects of this comes in, we can give regular updates on it.